So basically people have a position in, and then they have a really tight stop, like 3%. I'm going under my stop, I'm out. Under my stop, I'm out, right? So basically, this is all traders. It wasn't really investors. It's basically people making money week to week, month to month. There's 4 stocks with some serious leverage still that kind of the market continues to ignore. The market thinks that silver prices are going down. These stocks are getting prices if silver's going down, and they're not going up. So if we're right, if silver prices are going up, we're going to be rewarded in a big way.
So on. Our CEO, similar background. He's a world-class metallurgist, mine builder. So, many others on our team, like Dr. Ruben Padillas, found many millions of ounces in Colombia with Anglo and other companies. So really, we've got a very strong team that's been there, done it, from finding, evaluating, acquiring, building, and operating mines all over the planet. Really,
kind of what I've been saying in the last week or two is that we're going to get volatility, but overall, it's really just noise, because the bottom line is that gold is trending higher. And if you understand why it's trending higher, you understand why, kind of the winds at our back here. And so I just look at this year as more of a kind of ignore the news, if you will. So non-farm payrolls, gold going up and down. Like right now, silver went to 121, and now it went all the way down to 63, which is kind of oversold, and then it bounced back above 70, and now it's at 84. So it's in this trading range between 70 and 90. It will break. It will go higher. We have to think in terms of buying opportunity here. I always say, don't think in terms of short term. Don't think in terms of even 12 months. Think in terms, try to get some entry, but you're not trying to make money in 12 months. We're trying to win the prize here. And so, a perfect example was like 1911. They had a PEA. So they said that they were going to do 58,000 ounces. This is just their starting mine, right? About $1,900 ASIC. But they were using $3,000 gold. That was the number they used. So their payback was two years at $3,000 gold, which is a kind of a ridiculous number. So let's just say the gold goes to 6,000. That gives them an additional $3,000 per ounce. That's $180 million that they didn't count. And the CapEx is $60 million. So basically their payback goes from 2 years to 3 months, 6 months. So the payback is a total nothing burger above $5,000 gold. I mean, it just goes less than a year. And everybody's selling the stock. I mean, it was off 11%, which is kind of ridiculous. But you don't think, so the reason why it sold off is because it missed. Like, okay, the people were thinking that the CapEx would be a little lower, the production would be a little higher. So a little miss and the thing sells off 10%. And yet, mid-tier producers in Canada are uber rare. There's like one right now, one. Artemis Gold is like the only mid-tier producer right now that only produces in Canada. So we're talking, Canadian exposure, right? They're super rare. Next Gold is going to be one in about a little over a year, but they'll join the party. But 1911 is going to join the party a year from now too. Now they're going to be an emerging mid-tier, but they're going to get there fairly quickly. But my point is that gold producers in Canada are uber rare, and you got to own these things. And people are like, and who's selling that thing off 10%? That kind of, and people thinking so near term, they're basically, okay, I'm not going to make money this month, or it's like, it's basically hot money, right? So basically people have a position in, and then they have a really tight stop, like 3%. I'm going under my stop, I'm out. Under my stop, I'm out, right? So basically, this is all traders. It wasn't really investors. It's basically people making money week to week, month to month.
Despite short-term gyrations, the broader theme remains intact. Gold is trending upward amid macro uncertainty. Analysts increasingly characterize recent jobs data and economic figures as noise rather than directional drivers, a testament to the depth of interest in hard assets. Silver prices have fluctuated within a defined range, offering tactical entry points for strategic investors. Rather than viewing price dips as setbacks, longer-term holders see them as opportunities to accumulate. In that framing, precious metals are not short-term plays, but durable hedges against inflation, currency shifts, and geopolitical disruption. That perspective has led to renewed interest in high-leveraged junior explorers and producers poised for expansion.
We're seeing some crazy valuations. Another company I want to bring up is B2 Gold. B2 Gold, their run rate right now for free cash flow is over $2 billion, which is unbelievably insane.
Unbelievable.
And their multiple is 2.7. So their multiple is under a 3. And so their balance sheet by the end of this year is going to be pristine. I mean, they're going to have over 500 million on their balance sheet with no debt, and their dividend is going to jump. They pay 30% of the free cash flow out dividends. So they'll be paying a 5%. They're currently paying a 1% dividend, but by the end of the year, they're paying 5%. But nobody cares. It's like, oh, they're going to have $1 billion in free cash flow, and they're trading at a 2.7 multiple, or 2 billion free cash flow. And it's going higher. So this year they have some penalties, because of the financing. That all turns next year in 27, and their free cash flow goes up even higher after they get rid of some of these covenants that they have to use to build these mines. But it just shows you these valuations. So these miners are still really, really cheap. So I wanted to mention, we're talking miners. I just wanted to mention, like right now, like you guys are looking for leverage, if you will. But Silver Storm is one that I keep harping on today. I mean, it was up. Silver Mountain and Silver Storm have just been ripping. And then Silver Cove, those three. Now, these are all companies that are kind of near-term producers, like within a year. And then another one that's near production is Andean Silver. So we get these companies that are like near-term producers that are undervalued, that everybody's ignoring because the sentiment is terrible right now. It's terrible. I mean, when you see this type of price action, I mean, the reason why Silver Storm is up 20% today is because it's so undervalued, because the sentiment's in the toilet and nobody wants to own these stocks. There's 4 stocks with some serious leverage still that kind of the market continues to ignore. The market thinks that silver prices are going down. These stocks are getting prices if silver's going down, and they're not going up. So if we're right, if silver prices are going up, we're going to be rewarded in a big way.
Colombia's Mid-Cauca gold belt has emerged as one of Latin America's most compelling mining jurisdictions, blending rich discovery history with improving infrastructure and regulatory continuity. Historically overshadowed by more established neighbors, Colombia has recently attracted heightened attention as producers and explorers alike demonstrate the region's prolific potential. The Quinchía Gold Project, for example, sits within this belt, benefiting from proximity to operating mines and major discoveries, a geological corridor that has yielded significant ounces and deepened international investment interest. Infrastructure such as paved access, power connectivity, and available skilled labor further reduces execution risk. While challenges like environmental policy debates and illegal mining issues remain in wider Colombia, licensed, compliant operators enjoy a supportive, permitting framework that enhances development prospects.
Tiger Gold, a new company on the block. We just listed in December last year on the TSX, as you said, and we're now listing and about to be traded in the U.S. on the OTC, DTC. Cautionary statements, of course, encourage you to read, but really I just want to move very quickly through this and leave plenty of time for questions. At the end of the day, we're all about fundamentals at Tiger. Fundamentally, our asset in the ground is quite strong. Our leadership as well, quite proven, quite strong as well. We've done a recent PEA just last year, just before we listed, on the deposits that we've inherited or acquired, I should say, and now have 3 drills turning on, and it was quite strong economics. And, Don, to your point about, silly price decks, that was done at 26.50, that PEA, which was long-term consensus September last year. So, but anyway, strong there, obviously, on that basis, on those fundamentals. We've already begun, our quick move up the charts in terms of re-rating against our peers, and that is really what we're ultimately focused on delivering to shareholders as we continue to execute, looking for new resources, a lot of discovery potential, I'll show you in a second, as well as expanding what we already have and moving all of this ultimately through getting our arms around the size of the prize to then into engineering and then towards a construction decision over the next 18 to 24 months. The team itself, anchored by myself in the industry over 30 years, a mine engineer initially, long tenures with Barrick Gold, Yamana Gold, 15 years with Barrick, just under 9 with Yamana. So on. Our CEO, similar background. He's a world-class metallurgist, mine builder. So, and many others on our team, like Dr. Ruben Padillas, found many millions of ounces in Colombia with Anglo and other companies. So really, we've got a very strong team that's been there, done it, from finding, evaluating, acquiring, building, and operating mines all over the planet, literally.
Tiger Gold Corp is a newly listed gold developer focused on advancing its Quinchía Gold Project in Colombia's Mid-Cauca belt. In 2025, the company completed a reverse takeover transaction to go public on the TSX Venture Exchange, and subsequently began trading under the ticker Tiger, later launching on the OTCQB in the US to broaden investor access. Its flagship asset comprises multiple deposits, Miraflores, Tesorito, and Dos Quebradas, that together constitute millions of ounces of current resources in a district-scale system. An early preliminary economic assessment, PEA, outlined robust base case economics and significant upside with higher gold prices.
Now, of course, the Quinchía project that we're focused on here is in Colombia, in what is called the Mid-Cauca belt here. I call it elephant country. We're just surrounded with high quality, large scale discoveries, of so many types and values. And you mentioned B2, or Gramalote project to the north of us. Just 20 kilometers up the road from us, you have Aris with Marmato, you have Collective with their massive discovery there, and so on. So this really is an incredible, what I really refer to as an emerging tier one gold jurisdiction. It's outstripping many of the other gold jurisdictions, if not all of them, for the rate of discovery that we're seeing here. Of course, it's really cleaned up its act in terms of enablers, that being infrastructure, security, skilled labor, and so on. So it's just a phenomenal place where you continue to see significant foreign investment in and significant profit coming out of for shareholders. More specifically, as I said, we're in this region that are just surrounded with enablers. It's one of the things I talk a lot about, but it's essential to have for the success of any project. You're talking about grid power running by us, paved highways and roads into our project, access to skilled labor, to high quality consulting and contracting. It's all here. We've got the town of Quinchía next to us, hence the name of our project. 50,000 people, very strong base of operations, very supportive, very well engaged, and continue to engage with the two indigenous groups that we have. So really on the ground, we're literally hit it running and moving quite rapidly. We picked up this property around summer of last year, mid last year. It was on care maintenance for over 2 years. The previous owners decided to go back to the South Pacific, where their shareholders wanted them to focus, and they just left us alone. They were doing a good job of growing it on the ground. More specifically, what you see here is the core assets of Miraflores that was originally found by Anglo and then passed a few hands, ultimately into ours. That is a small underground project, fully permitted for construction and operation now. So that in many ways has helped vet a large footprint for us on this growing project in terms of not having any significant environmental sensitivities or restrictions. And next door to that, subsequent to Miraflores being advanced, was the discovery of Tesorito, which forms the second deposit in the PEA we did last year, over 1.5 million ounces. Now together, that's over 2 million ounces we have in current compliant 43101 resources, forming the backbone of that PEA. The third deposit that was discovered, but we didn't bring into the PEA, is Dos Quebradas. Just wasn't drilled well enough for our view, and the interpretations our geologists have are quite different, actually more exciting. So we're re-drilling this now. We've got a drill parked here doing that as we speak. We've got 2 drills on Tesorito, infill drilling, bringing its inferred resource up to measured and indicated, getting it ready for the next stage of engineering, along with Miraflores and whatever else is added. But also extension drilling. This is wide open on the south and southeast component here. of it as well, perhaps to the north, which we're exploring as well, but definitely to depth, it's wide open. All three of these deposits are open at depth and come right to surface. So along with that, we've got a lot of other discovered potential. I say that because there's already some historic drill holes into it. We know it's there, just hasn't been drilled out. So we're very excited about getting into what's called Seabill here, right next door to these core deposits. So a massive extension of the mineralized envelope that's already discovered here, as well as this Chuscal discovery south of it. So that, along with the low-hanging fruit of Dos Quebradas, we're bringing in. And of course, to the east of that, a major front of further discovery, drill-ready targets. You know, it's very ripe for some rapid growth of our resources and discovery. And I'll point out very quickly that at depth,
Tiger Gold's 2026 exploration campaign is central to its value creation strategy. A 10,000-meter Phase 1 drill program is underway, with multiple diamond rigs active across key targets. Recent assay results from Tesorito have shown broad intercepts of gold mineralization, with significant thicknesses extending from near surface and ongoing work that suggests the system remains open for expansion at depth and along strike. A third rig has also started drilling at Dos Quebradas to parallel resource growth efforts. These results are expected to feed into updated resource models and future technical studies that could elevate the project toward pre-feasibility and eventual construction decisions.
Today that we're growing on, and as I said, that as a basis for fundamentals and the work we're doing now to execute through 2026, moving us up the charts against our peers towards this peer group average. And of course, any way you slice this from a valuation perspective, we're undervalued, but we're also focused on capturing that and getting that delivered in so many ways that are being described here on the screen. Up against our peer group in Latin America, strong positioning as well. Expect to move up that curve as well as we grow the resources, switch to engineering, and really crystallize the growth of value we're after here. So really, we've positioned well in 2025, getting control of the project, getting our boots on the ground, doing the PEA, raising the funds, listing, getting 3 drills going. Now 2026 is all about us doing 2 10,000-meter campaigns back to back with 3 drills, peeling the layers of the onion, if you will, working towards understanding the scope and scale of the resource opportunity we have before committing to and switching gears into that next stage engineering of PEA and fees that'll likely take us well into next year towards then, you know, on the timeline right now, perhaps a construction decision by the end of next year. In parallel with all that, of course, it's the ESG initiatives on the ground that we're advancing with our stakeholders. So really, it just comes back to strong investor fundamentals from the perspective of the team, the asset, the economics of what's there and what we're building upon. The fact we're re-rating against our peers, but still undervalued. Great opportunity there as we unlock and crystallize that value we know is there. And cap structure, finally, it's a strong start for us. Good, strong management, insider holding, good start on the institutional side, retail as well. Essentially investors that really, to Don's earlier point, they understand the vision, they see the story, they're in there for their longer haul, and it's a great base for Tiger. So that's really a quick summary for you, gentlemen, in under 10 minutes.
Thanks, Robert. Nice job. A couple of questions for you, then I'll turn it over to Don. So can you go back to that slide that showed your kind of like timeline, couple previous? There you go. So you mentioned you have a PEA from last year, which was done at 2650 gold. It looks like you're going to proceed to PFS instead of updating that, correct?
When we say PFS, that will be inclusive of updated resources that we'll be working to put out throughout this year, starting with Tesorito. We're infill drilling it. In the process, we're bringing up the grade of it from the results that we've already publicized out there in our press releases. It's certainly showing that there's opportunity to do that. So we'll likely be bringing more grade in, adding ounces, a few more tons, and extending it, obviously the size of that pit. So that's really going to call for an updated resource. In addition to Dos Quebradas and working to bring that into a resource, the Seabill discovery that's right next door to Miraflores and Tesorito it's then what other discoveries are we going to find at depth? Until we get those questions answered this year, it's difficult to say how much of the existing PEA we're proceeding forward with versus any new discoveries or growth and sort of, structural changes, if you will, contextual changes of that PEA. But either way, it'll be additive and likely a larger project than what the PEA envisioned, which is really what's in situ today.
The narrative around Tiger Gold and similar juniors rests on 4 pillars: scarcity of Tier 1 assets, strong regional geology, progressive resource advancement, and valuation disconnects versus peers. With a PEA that demonstrates strong project economics, even at conventional gold prices and ongoing work aimed at upgrading resources, Tiger Gold aims to unlock latent value for shareholders. Upcoming catalysts include continued drilling results, resource updates, progressive engineering studies, and ESG engagement outcomes. For investors focused on multi-year catalysts rather than short-term trading, the combination of asset quality and execution roadmap presents a compelling long-term narrative in the current precious metals cycle.
That's right here. On the PEA, you're looking at $480 million initial startup capital for a 20,000 ton a day whole ore operation, producing about 140,000 ounces over 10 years. Again, that's what's in situ. That is likely not what this project is doing. However, Don,
sorry.
Yeah. Go ahead. Yeah.
Sorry to cut you off, but we only have a few minutes to that question.
Yep.
So, what year was this created?
September last year.
So, but you just started trading in December. So you were able. How long have you been working on the project?
As I said, we got operatorship around mid-year, June last year. That's when we got our boots on the ground and started to work up the PEA.
All right, outstanding. So, those numbers are all good. Those all work for me. So, permitting, you think you're going to be able to be construction ready by the end of 27? So that means how confident are you that it'll be fully permitted by the end of 27?
That obviously depends on what we're adding to the pot and what we're looking to permit, right? Obviously, we're focused on growth for that. But right now, with Mira Flores fully permitted, and the fact that once you hold a permit, it means that growth of that permit is considered a permit modification, which has a shorter timeline for permitting, despite the fact, obviously, you got to do the work on the EIA side and bringing engineering up to feasibility. It's something that is tenable for sure for us. But again, it's subject, as I said, to the scope and scale that we ultimately define this project to be by the end of this year.
Okay. I just had 2 more questions. The first one is, what did you guys pay? What's the option? And what do you guys still owe?
It was 10 million Aussie dollars in 1, 2, 3 payments. So we made our first June. That's what got us operatorship of $1 million Aussie. We just made a $2 million payment in February, and we've got 4.5 million Aussie dollars in June. And
did you give him any shares? Did you give him any shares?
No, all cash.
Wow.
So that'll be 100% ownership. So Don, you're right. Timing is everything. Sometimes you get lucky too. I think we got both here. Timing was good for pricing. We did get lucky. We got in early on this before they actually shopped it to hardly anyone.
Unbelievable.
It was.
Are there any NSRs on it?
There is a 1.5% NSR to a third-party holder.
That's basically nothing, right?
There is a buyback to that as well.
Okay, last question. Insiders. Now, I consider an insider as any long-term investor that basically wouldn't accept like a 50% premium. How many of those do you guys got? Percentage?
22% of our outstanding is with management and insiders. And I would add another 30% that you'd almost consider that as close strategic holders and partners of the company within the rest of the pots.